Good morning, Sharon. My sense is that 2023 is going to be a very volatile year, and I think looking at the kind of headwinds coming in from global markets like US and Europe, we could find that the first half of 2023 could be extremely volatile and could obviously generate extremely moderate to negative returns. It's only in the second half of 2023 that we could see a decent bounce in the markets, and I think with 5 state elections in India plus this being a pre-election year, I think you're going to see a lot of volatility. So I think investors should stick to the large caps, preferably, and I think they should follow the SIP approach, which I've been, telling your channel earlier also, that I think to buckle the volatility, I think it's always better to take a long-term view and stick to your SIP targets. Only that would obviously lead to wealth creation in the medium to long term. So I think there's no need to worry or panic. But I think you could see a lot of action in the broader market, and the index could possibly remain in a very volatile range. So better to stick to good quality companies and obviously use the dips to accumulate these good quality businesses at good prices. See, first of all, NetView is not a pure IT company. It's a data analytical company and has a very decent order book. The company is also debt free, has a lot of cash on the books, and the management has also mentioned that they are on the lookout for some good inorganic opportunities. So my sense is, I think, despite the fact that headwinds in the IT sector continue to be challenging, I would not be surprised if the company still shows a decent kind of growth, considering that they have a decent order book. I think growth numbers could possibly get impacted if there is a stronger point of recession from the US and Europe. But I think at the current levels, I would suggest the investor should hold on, keep a time frame of at least 12 to 18 months, because the company has inherently very strong business model. It's got a decent balance sheet, good cash on the books. So I think these factors should obviously help the company to face any negative eventuality. So definitely hold on for a longer time frame, and I think you should be able to get a decent risk reward if you hold on for the next 12 to 18 months.
Right, from Akash, and Avinash is holding some shares at a price of 418, near about the current market price. But going ahead for short to medium term, is that advisable to stay put in this counter?
Yeah, I think over the longer term, I think you could definitely expect a decent upside. My sense is that if the investor has a slightly medium to long term horizon, then I think he can expect a decent upside here. I think in the very near term, the outlook definitely is a little bit hazy. But obviously, in considering the kind of demand outlook, I would not be surprised that he should get a decent risk reward. The only point is, in these kind of markets, you need to stay put in some stocks, and I think keep a time frame which is slightly medium term. So I think he can hold on and obviously expect better returns in the coming at least 12 to 15 months.
Avinash, this one has come from Vasu, and he's asking whether it makes sense to go ahead and do bulk buying of Bajaj Finance at current price. Do you think it's an advisable move to look to invest in Bajaj Finance, given the fact that it has seen that sort of a correction, a sharp one, but do you think the fundamentals are intact?
See, my guess is Bajaj Finance delivered decent numbers, but I think they were below the street expectations. And I think, on a higher base, growth numbers in percentage terms are bound to come down. So I think the stock has been beaten down largely because the market was expecting higher growth. Now, as far as the investor's query is concerned, whether he can buy bulk buying, I would suggest, it's always better to buy in small lots or maybe in small tranches, because that will help him, average the price better. In case the Bajaj Finance comes down to level of 5,500 or typically 5,700, I think that would be a good opportunity to accumulate this stock, because growth numbers would definitely kick in. They are large players in the consumer finance, consumer durable market. They have a very strong asset quality, number, and most importantly, they are very well funded. So over the next, say, 2 years, if one wants to take a call, he should obviously look at buying this company, this stock in a small tranche manner, not in a bulk manner, because that would obviously mean he could obviously benefit from averaging the market price, which currently looks weak. So at least bulk buying should be avoided. But yes, he can buy in an SIP mode and obviously take a view for 2 years. Shrishti, as far as IRCTC is concerned, it's a regulated monopoly, and I think the major chunk of its business comes from the internet ticketing business. There has been a drop in the stock price, but if you look at the fundamentals, the company has been doing very well. In fact, post-normalcy and post-COVID, I think most of the trains which they operate are running as per schedule. My sense is that if the investor has a slightly medium-term horizon, he should use this opportunity to actually average the share here, because regulated monopolies are definitely very profitable. And I think, looking at the kind of announcements expected in this year's budget, railway infra is definitely going to be a buzzword, and probably one could get some further announcements which could give it a little positivity to the IRCTC, counter. Overall, the company is also planning to get into the bus ticketing business, the hotel business. So there are lots of opportunities, and the company is cash rich, has a very high ROE, return on capital operating kind of metric ratio. So all these factors point out that you need to give a little more time to the counter. Fundamentals are strong, but the sentiment is weak. So I think he could definitely look at averaging at the current level.
Avinash, can you help her, because she's holding Zomato at a price of 110, and the other one he has is Chola Investment and Finance from a price of 740. Currently at a loss in both of these counters. How are the fundamentals looking, and is it advisable to hold on or book losses at these levels?
Shrishti, as far as Chola Investment Finance is concerned, I would believe it's a leading, NBFC name in South. I would not be surprised that the coming year could be definitely better for them, because a large part of their business comes from the commercial vehicle financing business. They are also into tractor financing. So I would believe that, this stock could definitely turn around and show better numbers. Hopefully, the CV market is doing very well, and that should obviously percolate down to better disbursement numbers for Chola. So Chola is a hold. As far as Zomato is concerned, I think this company is yet to make any operating profits or any operating cash flows, and this continues to be a cash burn business. I would suggest that unless the investor has a 2 to 3 year kind of time frame, only then one should hold on to Zomato, because Zomato, unless and until we don't get any concrete data point numbers, especially on the cash flow, on the operating profit metric, this is a very difficult business to value purely on the EV to sales number. So I think most of these fintech companies have disappointed investors dramatically, and that is why I would believe that if at all, if the investor wants a short-term view on this stock, then it's better to exit. Only if you have a 2 to 3 year time frame, then only remain invested in Zomato. No, I think Bajaj Finserv is the holding company for Bajaj Finance, and they also have interest in the general and life insurance business, Cheryl. I would believe that longer term, the insurance business has yet to play out in a very big way. So my sense is continue to hold on. I think, these are short-term kind of sentimental kind of drawdowns in the market which happen. The company is fundamentally very solid, and I think the insurance business, my sense is over the next, say, 1 or 2 years, could see a lot of value unlocking opportunity for the shareholders. So I think Bajaj Finserv, she should hold on. There's nothing to worry, but yes, in the very near term, things could get volatile, and therefore the stock could underperform. But over the medium to long term, I would not be surprised that a lot of wealth creation opportunity could happen from the insurance business.
Next query that we have, Avinash, is from Murari Prasad. He's holding shares of Intellect Design at a price of 854 and currently at a loss of over 50%. What will be your advice on this?
See, Cheryl, I think Intellect, Design is a SaaS company, and there are very few SaaS companies available in the market. Most of them are PE funded, most of them are unlisted, and I would not be surprised that Intellect Design could definitely bounce back sooner than later in the next, say, 12 to 18 months. Their business is also related to IT, but they have a differentiated business model, and I think if you look at the order book position of Intellect, I think they have been very successful in getting a lot of orders, from the insurance, from the wealth management, and from the manufacturing side in markets like US and Europe. So I think currently the headwinds from the US and European markets are definitely challenging. So you could expect some underperformance on the stock for the next, say, 6 to 8 months. But over the longer term, a lot of value could get created. So, if the investor has a 2 year view, I think he could even think of averaging this stock, because definitely once the recession and once the underperformance in the US and European market completely gets over, the bounce back could also be equally faster. So there's no need to panic. Just keep a time frame of at least 18 to 24 months. See, I think just buying the stock because the stock has gone ex-bonus is not the right way to look at companies. In fact, Rama Steel Tubes definitely is doing well, but in terms of their their segment which they cater, it's largely the water and the electrical segment. So I think their growth numbers have been pretty decent, but the order book has not increased to the extent what the market has been expecting. So I think continue to hold on to the original shares. There's no need to hurry about to buying this stock just because it's got ex earnings bonus. My sense is that the oil and gas space, where most of the pipe companies cater, are better opportunities, and there I think he could look at stocks like Maharashtra Seamless, which is available at a very decent valuation, and where possibly the risk reward as compared to Rama Steel Tubes could be much better. So I would believe that this could be a better choice as compared to Rama Steel Tubes. Hold on safety, because IRB has recently decided to go in for a stock split, and looking at the kind of business positioning IRB infra has in the toll kind of business currently, I would not be surprised that this is an area where there's a tremendous growth opportunity. So I think if he can hold on for the next say 12 to 18 months, he could expect a decent risk reward here. So I think it's better to hold on, and probably he could expect another 15-20% upside in this time frame.
Anu is holding 25,000 shares of IDBI Bank at a price of 59 rupees 40 paisa. She's looking for a short-term view on this one. What will be your advice?
I think the IDBI Bank is definitely all ready to be sold to some private sector buyer. In fact, most of the roadshows have got completed, and the due diligence is also got completed. So very soon, in the next say 1 or 2 months, we could see some corporate announcement here. So I would believe that if the investor can hold on for the next say 2 to 3 months, probably some announcement could come in just after the budget, and that definitely could re-rate the stock significantly, because clearly IDBI Bank is now looking at some sort of a divestment, and that if it happens, obviously that could lead to a significant re-rating. So I would say that keep a couple of months in time frame in mind, and obviously the investor has a short-term view. So probably in the next 2 to 3 months, this news flow, if it does come in, that could lead to a significant re-rating in the counter.